Understanding investment tools and yield comparison. Introduction to investments. Investment tools and how they compare in terms of yield. Whether you're saving for retirement, a home, or long-term financial security, it's essential to understand how different investment options work. Investing means putting your money into assets with the expectation that they will grow in value over time, either by earning income or increasing in capital. Why should you invest? Investing allows you to build wealth by earning returns that outpace inflation, achieve financial goals, such as buying property or paying for university education, generate income through dividends, interest, or rental income, secure your financial future by building long-term financial resilience. Kenyan example: investing in treasury bonds through the Central Bank of Kenya offers reliable interest payments. International example: investing in a US-based S&P 500 index fund allows global investors to benefit from top-performing companies. Key concepts in investing. Risk: the chance of losing money. Every investment carries some level of risk. Return: the gain or loss on your investment over time. Diversification: spreading your money across different assets to reduce risk. Asset allocation: strategically dividing your portfolio among stocks, bonds, and other investments. Stocks ownership with growth potential. When you buy stocks, you're buying a piece of a company. Stocks offer potential for high returns, higher volatility and risk. There are common stocks with voting rights and preferred stocks with fixed dividends. Kenyan example: buying shares of Safaricom on the Nairobi Securities Exchange. International example: investing in Apple Incorporated on the Nasdaq Stock Exchange. Bonds, lending for stability. Bonds are essentially loans you give to corporations or governments in exchange for interest payments. They tend to offer stable and predictable returns. Lower risk than stocks, but also lower returns. Kenyan example: Kenya infrastructure bonds offer tax-free interest for local investors. International example: US Treasury bonds are considered one of the safest global investments. Mutual funds, professionally managed portfolios. Mutual funds pool money from many investors and invest in a mix of assets. Managed by professionals who select securities based on specific goals. Good for diversification. Investors without the time or skill to manage individual securities. Example: CIC unit trusts in Kenya and Vanguard mutual funds in the US. ETFs, flexible and low-cost investing. Exchange-traded funds, ETFs, work like mutual funds but trade like stocks on an exchange. They offer diversification with lower fees. Flexibility in trading throughout the day. Example: S&P 500 ETFs or NSE 20 Share Index ETF, available through select Kenyan brokers. Real estate, investing in property. Real estate involves purchasing land or property to earn rental income or capital gains. Offers tangible ownership. Potential for passive income. Requires significant initial investment. Kenyan example: buying a rental apartment in Nairobi or Mombasa. International example: purchasing rental property in a US suburban area or using REITs, real estate investment trusts. Comparing yields: what can you expect? Here's a hypothetical comparison of different investment tools. Investment yields and risk levels, Kenya versus USA, a comparison, on the below table. What affects investment returns? Market conditions, economic trends influence prices and yields. Type of investment: each asset class behaves differently. Risk tolerance: high return investments often come with higher risk. Time horizon: long-term investments have more time to grow and recover from short-term dips. How much risk can you handle? Your risk tolerance depends on your financial goals, time frame, comfort with losses, Young investors may tolerate more risk as they have time to recover. Older investors may prefer stable income-generating assets. Diversification: don't put all your eggs in one basket. Diversifying across multiple asset types helps manage risk. For example, a Kenyan investor might combine treasury bonds, SACCO savings, and real estate. An international investor could blend ETFs, stocks, and corporate bonds. How to get started. Define your goals. What are you investing for? Know your risk appetite. Are you conservative, moderate, or aggressive? Research. Understand each investment tool before committing. Start small. Begin with affordable options like money market funds or SACCOs in Kenya. Be consistent. Regular contributions grow wealth over time. Seek advice. Financial planners or licensed brokers can provide guidance tailored to your goals. Wrapping up, take control of your financial future. Investing is not reserved for the wealthy. It's a tool anyone can use to grow wealth and achieve their goals. Begin with what you understand, stay informed, and adjust as your financial situation evolves. Remember, the best investment strategy is one that aligns with your goals, time horizon, and risk tolerance. Thank you for watching. Take the first step today. Your future self will thank you.